Former Cisco CEO John Chambers has unveiled his next project, JC2 Ventures, which aims to be a purpose-driven firm. It already has 8 portfolio companies, including Aspire, a food tech company focused on farming crickets. Our Bloomberg Television editor-at-large, Cory Johnson, joins us now with John Chambers. Cory?
Yes, I am. Emily Chiang, thank you very much. John Chambers joins us right now, long time at Cisco. Now JC2 is the
Absolutely.
fund. Why is it called JC2?
Well, it's called JC2 because it's about the next generation of what I think venture capital will evolve into with mentors, etc. I'm doing it also with my son, so it's JC squared.
Who's also John Chambers, yes.
Yes, he is, and also Shannon Pena. So we're forming an organization that we believe will help to grow probably a dozen startups initially, catching market transitions from everything from drones to social media to security to cricket farming, which we've talked about before in terms of the capability.
How much money? How big is the fund?
It's going to be about $100 million. It isn't a fund. It will be financed by my family.
Okay. So $100 million, that'll go a long way these days where startups don't need the kind of capital that they used to. You're not talking about building semiconductor fabrication plants, but also, which were very expensive. But what's really intriguing to me is this notion of social impact. That this is a substantial sum of money, but focused on social impact. Talk to me about what that means to you and how that plays out with investments.
Well, you know, it's interesting. If you look at my past, my prior life, and this is my next chapter, it was about Cisco growing 18 major product areas, being number 1, number 2, but changing the way the world works, lives, learns, and plays, which you said in the early 90s. And we won most every corporate social responsibility award. We then moved on, and what we're doing at this time is really focusing on startups where all job creation has to occur. The large companies will not hire over the next decade. Startup funding, as you know, in terms of number of companies is down dramatically, a 40-year low. You have countries like France, where I'll be with President Macron on Monday, talking about their startup engine, and it goes 4x in literally 3 years, the number of high-tech startups they're doing, than with Prime Minister Modi in India. I would like to see this go across the whole U.S. Otherwise, we're not going to get 25 to 30 million jobs 8 years from now. And I would also believe that's where innovation will be done, is in the startups. So if our country in the U.S. is going to lead, it's got to be uniform across the states. It's got to also be the innovation engine for our future. So I love growth, Cory. I love challenges, and I get my pick of the litter in each market transition, and I'm trying to do a good job, not in being a venture capitalist. It's about mentoring young CEOs, helping them grow their company, knowing who's really coachable.
Well, let me ask about that, this notion of coaching. So one of the things, Cisco under you did so many acquisitions, and unlike so many companies in the Valley, those acquisitions, famously went very well. And I wonder sort of what that meant in terms of coaching and mentoring and how that might play out in this fund.
It's a great question, Cory. It plays out in 2 ways. The first is, from the first acquisition I did, Crescendo, paid $90 million for a company with $10 million in revenue. Stock went down. It's a $13 billion revenue stream per year now. To one like Meraki, where we paid pretty high price for $100 million in revenue, and yet less than 4.5 years later, it's a $1 billion run rate. So the first thing is you've got to get your market transitions right. The second thing is you've got to get companies that fit into your culture, and you do that by just spending time with the CEO. I know within 15 minutes when I would go talk to an acquisition candidate, were we going to do the deal? And
but what do you see?
With startups.
Because you and I have had this conversation for years. What do you see in those CEOs?
Oh, it's identical. You see very highly motivated, extremely high energy, really smart people who really want to be coached. You can feel their culture in terms of their attitude toward their people, their customers.
Want to be coached?
Want to be coached. If they don't want to be coached, I move them aside. And in acquiring companies, you wanted to acquire people who wanted to stay with you, because our attrition rate on our acquired companies while I was CEO was less than 5%. That's unheard of.
It's unbelievable.
Same thing.
Because those people just got really rich in the acquisition in certain ways and may be more likely to leave.
20 to 30% in other companies. So the same thing with the startups. I call them innovation playbook. I'm going to write a book on this you'll see in the fall, and I'd love to discuss it with you sometime. But the same thing with the startup CEOs you look for. Are they able to visualize a market transition? Are they either really brilliant engineers who grasp the technology, or really brilliant business people and marketing who understand the implications of it? You then look at their culture. And many times the young CEOs, Cory, don't talk about culture. They get the strategy and vision. They get the management team evolution. solution, they get seen around corners, they get the communications, but you never have a great startup without a very strong culture. And so teaching culture is a huge part of what I do, and there's nothing more exciting than when all of a sudden you see the lights go off and they get how culture will make a difference in their future. And then it's fun talking to companies about 50 to 250% growth and scaling.
Which is not necessarily what you saw at Cisco. You sort of got some ideas that are very nascent now, but the notion of what that growth could be, hockey stick growth, on a whole different level.
We did. When we started at Cisco, we were 70 million in sales, and at the time I left, it was 47 billion. Number 1 and number 2 in 16 out of 18 product lines. We used acquisitions to do that, but also internal development. And once you understood how to spot good acquisitions and pick the culture out, it's the same thing about catching market transitions for these startups. And then I get the choice usually within every industry. I hope I can live up to their expectations. And the money's really the third thing on their mind. They really want a coach, a mentor. They want somebody who's done it before. And I won't go with anybody who really doesn't want some tough love and the balance. And today I talked to 3 startups, typical problems. I've got a personnel problem. Here's a customer issue I've got. Or I really need to struggle with how I get my cultural message across.
Does the cultural match probably doesn't, it used to be you had to acquire a company where that culture would fit in with Cisco.
Always.
You don't have a Cisco to match it with anymore. Does that cultural match work as much, or is it more that culture has to match with you?
Even more. I won't go with one that I don't culturally match. So if you think about the startups, I just very quickly name them for you. And the sprinkler that we've talked about before, and literally social media management, changing the customer expectations. The Dedrone, or
the company that can shoot down drones, essentially.
Yeah, and that's Dedrone that basically freezes it. And Airware does the commercialization of drones in insurance and construction. OpenGov does transparent government. It took a high from number 43 to number 1. You have Unifor that really would do a virtual assistant, speech assistant in the enterprise. You begin to think about Aspera on crickets that we had talked about, or Pindrop on voice authentication, or Prevero that actually makes your phone really secure. But all 8 of those CEOs, even though they're from all over the world, now all Americans, if you will, they have the same view in terms of what's right and wrong, same view of wanting to build a great company, same view in terms of how you treat people. So I select the companies that I become a partner with as much on culture as I do the other aspects, and their willingness to really want to learn.